Hi, good week to all. Welcome to this week's latest edition of Weekly Technical Outlook on the major stock indices for the week of 18th of October to 22nd of October. So, as usual, I'll be covering the latest trend bias and the latest key levels on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and as well as the German 40 index. So, before we get started, let's take a look at the disclaimer slides first. All right. So, before we go into the detailed technical analysis of the various major stock indices, let's take a look at the raw momentum data across the globe. That means we're talking about from US, Europe, and Asia. So take a look at the S&P 500. So as you all know that 4 weeks ago, the S&P 500 has staged a decline. But what remarkably in the last 2 weeks, including last week, it managed to state a recovery across the block. Okay, so with the one that is outperforming will be the Nasdaq 100. The one that is underperforming is the Russell 2000, which is up by 1.46%, but it's still positive, which is good. And followed by the Dow Jones Industrial Average, which is up by 1.58%. So what's interesting, if you were to compare the weekly performance against the prior 4 week average, it started to all four of them started to shape positive figures. That means what it means that last week performance is actually more than this prior 4 week average, which indicating to us that upside momentum, at least in the medium term, has started to resurface on the major US stock indices, right? So definitely the one that is outperforming will be the Nasdaq 100, which is heavily weighted towards the technology stocks at 3.21%. Right. Then going on to Asia itself. So even though that in the last 3 to 4 months back, we start to see that the worst performer will definitely be Hang and Hang Tech. So that we are saying definitely because it's related to China, where it started off as a regulatory clampdown on the big tech and it started to spread over to the wider private sector. And the last 2 weeks has been this ongoing negative news flows about China property sector that tends to be triggered by this amount of huge debt that Evergrande actually is holding that may create a systematic risk. But however, if you look at from a price action perspective, the Hang Seng also managed to actually stage a 2 weeks of consecutive positive performance, and it's more than the previous week, 1.99% versus 1.07%, 1.81% versus 1.72%. And what's interesting over here, it's the difference between last week performance versus the prior 4 week average stood up remarkably strong at 3.28% and 3.85% in terms of the difference. So what we could see over here is it actually supports that potential mean reversion rebound scenario that we actually have in place for the Hang Seng Index that we mentioned last week. Later, I'll touch on more on what is the next level to watch for the Hang Seng Index. And even the Nikkei 225 as well. Okay, previous week was a very steep pullback, negative 2.5%. But however, last week it almost reversed entirely its previous week losses, 3.64%. If you compare to its prior 4 week average, which is negative 1.96%, this is the strongest outperformer last week in terms of measuring of that momentum, the difference between last week performance and its prior 4 week average at a positive figure of 5.6%, also indicating to us potential upside momentum starts to revive in the K225, at least in the medium term. Then, even though in the similar for the German DAX index as well, which represent Europe, 2.51% last week compared to its prior 4 week average at negative 0.65%, also a positive return in terms of the difference momentum, which is indicate to us upside momentum as well, at least in the medium term of 3.16%. So all in all, what we could see over here now is an emergence of kind of at least a medium term recovery play across the board for all the major stock indices. So now the next key level we got to ask ourselves is what is the key levels to watch over here? Since we know that it has already recovered within our expectation, can it go much further or would there be a potential pullback? So before I jump into the technical chart, right, let me take a quick glance first or on the 11 sectors of the S&P performance last week. So very strong, I would say, relatively, because almost all of them are in green. I would say 10 of 11, except for the communication services which is last week down at negative 0.43%. Materials holding the top outperformer 3.6%, followed by consumer discretionary 3.55, real estate 3.52. Then you have information technology at 2.67. So overall, I would say it's a rather healthy picture where all 11 sectors, almost all 11 sectors, are actually participating in this recovery phase, potential recovery phase of the S&P 500, which is in turn also in turns we'll start to see across the group as well as the based on the table that I highlighted to you. Okay, good. So without further ado, let's jump into the technical chart. Okay. Okay, let us start off with the S&P 500 first. So as you could see, the S&P 500 over here started to shape this potential cup and handle formation. And what's positive over here is started to actually surpass above the 50-day moving average again. So the 50-day moving average right now is acting as a support roughly at 4,430 level. Also, we start to see a basing formation, as we mentioned, highlighted last week on the daily RSI oscillator, which represent a firm or a reinforce this, we call it a medium-term upside revival on the S&P 500. So now going to the strategy chart, which is our 4-hour chart, as you could see over here is that if you recall our 4-hour chart, the first resistance we're watching at is 4460/50, then thereafter followed by 4520/4540. So what we could see over here is that the 4-hour, not this, not daily, the 4-hour, the 4-hour RSI has started to come very close to the extreme overbought level at 80%, as you can see from here. And right now, in fact, it's now intending to actually exit from the overbought level. Okay, so what it means that over here is that potentially this rally over here since the low of 30th of October all the way up to last Friday's high, which is coming very close to our first resistance as well. And also is the upper boundary of this short-term ascending channel that I drew from the low of 1st of October. So what we could see over here is that based on short-term momentum indicator, this rally over here seems to be a bit overstretched, at least in the short term. So potentially right now, we are at risk of an imminent pullback, a minor pullback, not a total disruption change in the trend. Why? Because if you look at the daily chart is rather positive above the 50-day MA, showing this cup handle formation as well. RSI is basing. So longer term picture is indicated to us potential higher high ahead, except that only the shorter time frame on the 4-hour chart, we are now seeing a risk of a pullback. As you all know that all trends don't go vertical up, right? There will be what I call pullback to form a minor consolidation before a series of next leg of higher high potentially. So what is the pullback target or level to watch will be 4420, which is this former swing high area over here, and as well as the key support level for this week, which I tighten it up to 4370. So what's 4370? If I were to draw a Fibo retracement to retrace the current entire recovery, it's actually close to the 50%. All right, and coincidentally, also the lower boundary of this short-term ascending channel, as well as this congestion zone in place formally from 1st of October all the way to 12th of October. So as long as this pullback doesn't break below 4370, so as long as we don't have a 4-hour close below 4370, the medium-term uptrend, we talk about a multi-week uptrend, remains intact for it to actually set sign on the next resistance, which is at 4520/4540, its current all-time high level, and as well as the upper boundary of this short-term ascending channel and the 2 times Fibo projection as well. All right, so that's for the S&P 500. Overall, trend still remains bullish in the medium term, except for the risk of a minor pullback right now. Okay, now going to the Nasdaq 100. So as you could see, the Nasdaq 100 over here, this one here, it hasn't surpassed the 100-day, pardon, 100, the 50-day moving average yet. But what's interesting over here is correspondingly, the RSI has managed to surpass a key previous resistance, which is here. Can you see this previous 50, the 50 neutrality level? So RSI already surpassed this corresponding former resistance at the 50% level. So indicating to us a potential chance that the 50-day MA will be taken up on the upside as well, because upside momentum has indeed potentially start to show signs of building up and revival. Okay, after the bounce off from the key support level that we highlighted 2 weeks ago, 44,480/14,000. 14,480/14,320. So what is the levels to watch for this week? Okay, so this week new level will be As you could see, very similar to the S&P 500, coming very close to the first resistance at 15,100/200, which is the what we could see over here is that the RSI also hitting very close to the extreme overbought level. And right now it's attempting to turn down or exit from the overbought zone. So what's indicating to us right now is a potential pullback that is coming into place on the Nasdaq 100, very similar to S&P. Resistance to watch will be at 14,950, and maximum level will be at this Titan key medium term pivotal support at 14,745. So what's 14,745 is also the 50% retracement of the entire recovery move that we see from the low of 1st of 4th of October. Okay, close to the 50%, and as well as the lower boundary of this short-term ascending channel. So as long as we do not have a 4-hour close below 14,745, this medium-term or multi-week bullish uptrend phase remains intact for a further potential upleg to set sign on the next resistance at 15,350, which is comprising of the 2 times Fibo expansion level from here to here, the upper boundary of the short-term ascending channel, as well as the former swing high area of 27th of September, corresponding to the previous congestion zone over here, minor congestion zone from 14th of September to 15th of September. All right, so this is the next key medium-term resistance to watch in this ongoing potential medium-term uptrend phase on the Nasdaq 100. Okay, now moving on to Asia will be the Hong Kong 50. So just a recall, Hong Kong 50, where did it bounce? So if you go to the weekly chart, it actually bounces off this long-term circular ascending trend line that is in place since the great financial crisis low, which is October 2018, and previous decline from the April 2015 high all the way down to this January 2016 low, which comprises this particular move down is actually triggered by the yuan, the Chinese yuan shock devaluation at that point in time. And January 2018 all the way down to March 2020 will be, this is due to the trade war and as well as internally the Hong Kong protests. And last but not least will be the pandemic crisis. Let's see. So all these 3 points here, significant 3 points, managed to help above this long-term ascending trend line support, now acting as a support level at 24,000, which managed to help rather well in the last 3 weeks. All right, so that's a pretty significant support level to watch where the market actually held at that level. What we call that last week managed to turn, we flip to a bullish bias, but do not forget we still do not attempt to see a potential recovery yet. Why? Because it's still evolving in this very complex expanding wedge, as descending expanding wedge range configuration that is in place since its 52-week high, the current 52-week high, which is the 18th of Feb 2021 high over here. It's still within this expanding wedge descending range configuration. So all in all, what we could see over here is yes, we remain bullish. What we could do, because the market has really rebounded significantly from 24,000/23,500, we will tighten the key medium-term pivotal support for this week up to 24,550. So this is the key level to watch to maintain our bullish bias for the further potential upside to test this medium-term range resistance that is in place since 4th of August at 26,750/27,000 psychological level. All right, so we are looking for a further potential push up, not to much higher, but only to this medium-term range resistance over here first, taking things one step at a time. Okay, that also coupled with that, we still have a kind of impending negative news flows that is surrounding off from the China property sector, which is Evergrande itself. Okay, that has yet to resolve. Okay, yeah, so definitely if we see a 4-hour close below 24,550, that means all bets are off for this further push up. We will start to see another very choppy move of decline back to retest the long-term key support level at 24,000/23,500 as highlighted on the weekly chart. Now moving on next to the next major Asia benchmark index, which is the Japan 225 over here. So Japan 225. So what we could see is that the Japan 225 has managed to shape a rather V-shaped recovery. Okay, right at this pullback support level. Yeah, it did a bit of test over here, but what it actually managed to survive, it managed to bounce off from this long-term key pivotal support we highlighted much earlier on our quarterly outlook, 27,500/26,880. So if we could go to the weekly chart, Okay, this is our quarterly outlook. Still call this is the key support level to maintain our Q4 bullish outlook on the Nikkei 225. Now, back to the strategy for this week. So what you could see the strategy for this week now over here is, yeah, the RSI also start to turn down from the overbought zone. So indicating to us there is still a bit of room of pullback more to go towards 28,750. So maximum should able to watch for the pullback will be at this 27,960 key medium term pivotal support. So we actually tightened the key support level up for this week to 27,960, okay, to maintain this medium term bullish bias for a potential further up move above 29,450. Then thereafter a break above should take us much higher towards 30,330. So if we have a 4-hour close below 27,960, then we will start to see another kind of very choppy corrective down move to retest the key long-term pivotal support at 26,880. All right, so for now, no change, still maintain that potential bullish bias that we have on the Japan 225. Okay, now going on next will be the German 30. So if you look at the German 30 index here, pretty much supported by the 200-day moving average that we highlighted last week, showing a bullish hammer. Then thereafter, it started to shape a series of higher high and higher low. All right, and right now it's intending to actually go past the 100-day MA as well. So yes, bounces off nicely for the from 14,800 slash 750. RSI also showing the same indication after that bullish divergence you see over here starts to surpass the 50-day, the 50% neutrality level as well. So indicating to us that the upside momentum in the medium term remains intact. So now what's the 4-hour strategy like for this week? So if you recall over here is that we have resistance that we set last week at 15,720, almost hit that resistance level. So last week high was at for 15,628, okay, almost very close to 15,720. So that's the resistance we have for last week. So what we could do right here over here is the RSI also coming very close. This is a 4-hour RSI, not the daily. So it means short-term momentum. Short-term momentum indicating to us is kind of overstretched. Why? Because it's coming very close to the extreme overbought level at 80%, and it's now attempting to turn down from the overbought region as well. So indicating to us that we may start to see a further, we call it potential minor pullback within this medium-term recovery phase that is intact so far from 6th of October. So pullback level to watch will be 15,400 with a maximum limit set at 15,250. So that's our tightened key medium-term pivotal support for this week. So as long as this level holds, that means there's no 4-hour close below it. We still do expect this German 40 index to kind of resume this medium-term uptrend that is in place since 6th of October low to actually test 15,720. A break above it should test this close to this all-time high level range resistance at 15,960 next. All right. So overall, what we could see now is we are in a kind of medium-term recovery phase, at least in the medium term, multi 1 to 3 weeks for all the major stock indices. But because of a very steep up move that was seen last week, so we do expect a bit of minor pullback to take shape first for the early part of this week before the indices starts to resume its major potential, major resume its medium term uptrend from the October low. So definitely, if it has a 4-hour close below all the respective key medium-term pivotal support, then it will actually invalidate this medium-term recovery scenario that we are expecting. So with that, thank you for your time, and I wish you all a great trading week ahead. And I see you all next in my next video.